In this chapter, we'll be discussing about fiscal deficit. So, fiscal deficit occurs when a government's total expenditure exceeds the revenue. Okay, that is generates. We exclude money from borrowings for this purpose. So, that is fiscal deficit. So, deficit is different from debt. Deficit is for a year, while debt is accumulation of yearly deficits. So, then you might get a doubt, if government total expenditure is exceeding the revenue it's getting, then how is it able to finance the difference? So deficit is usually financed by borrowing from central bank or raising money by issuing instruments like treasury bills and bonds. Fiscal deficit is actually regarded by some economists as a positive event. For example, the famous economist John Keynes believes that deficits help countries climb out of economic recession. The reason why some consider it is positive, because fiscal deficit could be either have been the result of either revenue deficit or increase in capital expenditure. So capital expenditure results in long-term assets creation like factories, buildings, which is good for the economy. So we learned earlier that companies are given ratings by rating agencies. We've seen a lot of rating agencies like CRISIL, CARE, Fitch. Similarly, countries are also given rating by some agencies. Now, high fiscal deficit is seen as a negative point and then can result in downgrading of the rating. Okay, so fiscal deficit is usually expressed as a percentage of GDP. And you have to remember the Indian figure for fiscal deficit for India is 3.51% for the year 2016-17. The target is to bring it down to 3.2% in 2017-18. Okay, this is a figure that government keeps track of. They want to keep this fiscal deficit under control because it's a measure of the fiscal discipline of the government. So the questions you need to prepare in this chapter are: what is meant by fiscal deficit? Why is fiscal deficit considered positive by some economists? If the government's total expenditure exceeds revenue, then how is it the difference financed? And what is India's present fiscal deficit as percentage of GDP?